back to Carl and Rick Talk Risk. Rick, how are you?
Unbelievable. It is so awesome being me. Yeah. Okay. How are you, Carl?
I'm good. Almost the weekend.
Almost.
Um, yeah, and my favorite season of the year, the autumn. It's lovely here. The rain hasn't kicked in, and it's not as hot as it was in the summer. So enjoying Dutch weather here. Um, Rick, it was a big week for some people. Um, Jerome Powell, the chairman of the Fed, came out as expected and put made a huge cut in the federal policy rate of 50 basis points. And I don't know, depending on who you were, you either celebrated if you were a day trader and you're on the right side of that, or if you're most other countries that are somehow tied to debt in US dollars, or your economy somehow tied to the US dollar, and you've been struggling with high interest payments, you breathed a heavy sigh. But you know, how much does this really matter? I mean, it feels like a toss up between the election and this cut, like just excitement and you know, everybody was waiting for it. And I just wonder, how much does it really matter? Because Jerome Powell's moving an overnight rate. Homeowners, for example, have 30-year mortgages in the US. They're not going to see an impact very soon. Rates tend to go down very slowly. Banks, I mean, they want to keep charging high rates. It's very sticky. And also, we know that transmission of a cut or a hike takes, I think, around 18 months to work its way through the economy with all the first order and second order effects. It takes a really long time. I know. I'll stop. So, so should we even care? What do you think? Hello?
Oh, I'm sorry. Are you still on rates? Look, rates are important. But seriously, all the incessant talk in the news, in the 2 weeks leading up to it and since the announcement, I mean, who did not know that there was going to be a fall in rates? Yeah, we could, there's some question mark whether it's going to be 25 or 50. And yes, for, some people, it does make the difference. And for some organizations, it does make a difference. But the reality is, it is what it is. And it was completely expected. The only issue was the size. But yet still we okay. Now, if he had raised rates 50 basis points, now we've got something to talk about.
Yeah.
This is where it gets interesting. You know, uh, I've got a little story to tell. So uh, for many years, I would take students to a financial center, either generally Chicago or New York. We meet with various, financial engineers and professionals and institutions, and we go around to a few of the major trading floors and whatnot. So we're on a trading floor for the day. Actually, this was in Canada, and we're on the trading floor for the day, and we're going to be there when the rates announcement comes out. Okay, so I've got the students all psyched, and they're there, waiting for the room to explode, and you know, um, there was a big decision. Are we going to get a cut or status quo, quote or
Yeah.
status quo? And that probably had much more of a sway on position. So the students are all there lined up against the wall, kind of all standing back, and the trading room. I love a trading room when an announcement is coming out, because a trading room and exam time are the exact same. I love being in an exam room just before the exams are handed out. So at Dalhousie, like most universities, several classes will rate an exam at the same time in the basically in the what we call the Dalplex, a huge gymnasium. So you have, several thousand students in different rows rating different exams. And coming into the exam, it's just like a training floor. You're there in the outer room and, oh man, I got so hungover last time. I'm so gonna bomb this exam. And everyone's got all this nervous chatter. That's like that on a training floor. And then, the exams are handed out, but the students can't touch them, and the room goes deathly silent. Likewise, on a trading floor, in the 5 minutes before everyone's, if they do this, I'll do that, chatter, 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 lots of noise. And then everyone kind of gets quiet, straightens the pen on their desk, moves their coffee out of the way. And it's deadly quiet. And it's deadly quiet in the exam room. And then, the chief invigilator says, you may now open the exam. And all the students rip open the exam, thinking that a difference in 2 microseconds from opening the exam slowly versus opening it at normal pace will be all the difference between a 96 and a 42 on the exam. And likewise, a trading room explodes when, when the number comes out.
Yeah.
And so, I had the students all psyched for this. We're on the trading floor. We're there when the, 10 minutes before the number comes out, they see all the people chattering. And then the room goes deadly quiet and it comes out status quo. Everyone goes, oh. And the room goes, oh. And nothing happens. And I kind of go, oh, because, I want the students to experience the thrill of a number coming out. So, that's fine. We go and we, thank the person who allowed us to be there. We do all that customary stuff. And, we go downstairs and in the food court in the office tower. And, a bunch of the traders are now down there lined up at the coffee shop to get a coffee because, it's status quo, nothing really to be done. And then all of a sudden, I could make a Middle East reference here, but I won't. But then all of a sudden, we notice there's all this activity. And the traders are running out of, the food court like, it's on fire. And it turns out that they sent out the wrong announcement. There actually was going to be a rate change. And so we were there perfectly positioned to see mass chaos.
Yeah.
And we missed it. So I think it would have been much more worthy if they announced there's going to be a rise of 50 basis points. And this is, the risk management is about surprises and managing the surprises. If you get what you expected with 99% probability, heck. Now, this brings up the issue of why was there so much trading activity the day after? And, I was out with a group of students yesterday for breakfast. Wonderful time. And, these are all finance snobs. And, I say that with respect and, all that other good stuff. And one of them goes on a bit of a tirade about the difference between trading and investing. And I think that that's very key for risk management. And he goes that the online particularly the online brokerages, but not only the online brokerages, are basically developing an addiction in people for trading versus investing. And I think that that's the lesson that we can see from all the activity, not immediately after, not in the seconds after or the minutes after, but in the day after. And that, I think, is a much longer and much more serious risk issue to talk about than the fact that we got a cut of 50 versus 25.
Yeah. But that's how you get rich, Rick.
Well,
crypto
that's
and
why I'm so poor. That's why I'm sitting here in a dirty T-shirt. Damn it.
yeah, you didn't know that? Single stocks, crypto, and NFTs. Remember that phase? Non-fungible tokens.
Hey,
Everybody
man,
was
you want to
buying.
see my stone monkey collection, art collection?
Oh goodness. Yeah. Well, yeah. Um, you raise an interesting point just quickly on like the hikes and cuts. Just the language is so interesting because the cycle has turned. The cuts have begun. We haven't had a cut in 4 years from the Fed, and it all implies to me there's there's only one direction. Rates are going down from now on. And that isn't a guarantee at all. Inflation could come back. Services inflation is still pretty high. I mean, that's something that shows up in the minutes of these central banks. But it's just you can feel from the articles that like this is it. This is the big day. This is everything's gonna get better from now on. It's just this utopian sort of scenario, and like you said, I think that's where risk managers are critical, because it's like, hang on, this could turn around.
Well, a couple of things on that on rates. First off, being a father of some young adults,
Mm.
um, I'm constantly bombarded with, you had it so easy. Do you realize how high rates are in terms of buying a house?
Yeah,
And yeah, actually, I do.
yeah,
Okay. And rates when I bought uh, my first house were hell of a lot higher than they are now.
right.
Okay. And um, and so we need perspective. You know, here's one of the things I think that is interesting. First off, it's always been the economy, stupid. So the economy's always been news.
Yeah.
Okay. But with social media, et cetera, we have all the well-known problems of journalism,
Mm.
of the journalism industry as a whole. And so I think that one of the factors is the economy with hard facts or sorry, let me retract hard facts with hard data is
Mm.
one of the few areas that conventional journalism can still probably keep some credibility.
Yeah.
Okay. And so therefore they hype that so much more. Now, again, that might be my own personal bias and being in my own echo chamber, being a consumer of 6 newspapers a day, 3 of which I read solely for the comic strip pages. But, that's a little boy in me that still can't mature. Okay. Uh, but we have made the economy the equivalent of a daily sporting event.
Yeah.
And I'm not 100% sure that that's valid. But
Hmm.
also, you talked about trends. I'll say it again. You know, Listeners of this podcast have heard me say it several times. I only learned 3 things in business school. One of them is just when you think it's a trend, you'll find out it's a cycle.
Hmm. Yeah.
Now, tell my parents about who bought a house, during 25% mortgage rates.
Yeah. Yeah.
Yeah, let's convince them that rates are abnormally high.
Yeah. Yeah, exactly. It's interesting, like how quickly everybody gets convinced of a popular narrative, right? And it spreads out there, and nobody's sort of pointing out that this could reverse pretty quickly. And the Fed's mandate is not to keep people happy and keep things moving in one direction. Their mandate is jobs and inflation.
Well,
And
it's interesting. I was on national TV. You know, I get interviewed in the news occasionally.
Mm.
Let's leave it at that, okay? And so, on a national TV interview, that was after one of the rate announcements in Canada, and I made the point that it was not the job of the central bank to please the stock market.
Yeah.
Well, I thought the the interviewer, fortunately we're doing this over Zoom, because otherwise they would have banged me over the head, and they got literally almost abusive in
Yeah.
that. What do you mean? That's the
Yeah.
sole reason that we have a central bank. It's
Yeah.
like, no, it's
Yeah.
not to make the central bank is not there to make investors happy.
Yeah. Yeah.
That is not their role. And I thought, wow, you've been a business reporter how long? I didn't
Yeah.
say that, but the little squirrels were going around up there chattering in that verbiage. And but that's the belief
Yeah.
of a lot of people, that goal number one is to make things cheap, which
Yeah.
arguably is halfway there, not
Sort
right,
of.
but halfway
Yeah.
there.
Yeah.
Control inflation, and number two is to make investors happy, which is,
Yeah.
mm, you know, at best a nice side product if it happens.
Yeah. Exactly. Or in Canada, um, well, the housing market is stopped. So could you just cut rates so we could continue buying houses?
Well, first off, we need some houses, but
Yes.
we got the people, we need the houses.
Yeah. But the Bank of Canada is not building them.
The Bank of Canada is not building them.
I know.
You know, uh, yeah, that's a whole other issue with
Yeah.
that. That's a problem with 8,000 parents.
Yeah.
I 8,000 causes.
Yeah, yeah, okay. Yeah, 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 exactly. But I liked what you just said about, oh, you're a business reporter. Like, what are you actually doing? We just had an article in Intelligent Risk back in August about central bank independence. And you triggered my memory of that because the author basically argued that, listen, central banks haven't always been this independent of politics and the economy. And when they were more entangled with the political parties and whoever was in charge,
Mhm.
things went really badly, right? Because they did what felt right, what kept people happy, and that drove inflation. And that's why we have independent, for the most part, central banks that have very limited mandates and should ignore political pressure. Um, and yeah, that's not kept in mind very well with the reporting at all. I agree with you there. Um, yeah, so it's a good thing we have independent central banks. It's an excellent thing. They're a shock absorber for what's going on in the economy. And they don't know your personal situation, right? I mean, they are really this term is always used that central bank policy rate is a blunt instrument. And I don't know if that sinks into most people's understanding. It is an overnight rate charged on bank deposits at the central bank. I mean, like, it's
Which, by the way, no one uses.
which no one uses for the most part. And also, let's not get into it, but there's the policy rate, but then there's all the quantitative easing and other central bank programs that they use to influence, you know, the how much financing is available and everything. So it's one tool that's pretty blunt in an entire tool set that has some impact on longer term rates and what banks are doing and so on. But really, we shouldn't be hung up on this.
You know, on the flip side, uh, tone matters. I think, as a complexity theorist, I believe that the tone and the implied message is actually probably more important than the actual number in the long run. And that is very interesting. But of course, we have a little event in November that could make this entire discussion moot.
Yeah, that's very true. And just by tone, Rick, you mean what's in the wording about
Well,
the
I
decision?
mean obviously one of the tools, and Greenspan, of course, was the expert at this. One of the tools that central banks have is, talking rates up and down, talking the currency up and down.
Right.
And that's what I mean by the tone is, kind of what's the message between the lines that you're trying to set. But also by tone is, are you trying to make people more optimistic or people more cautious? Now, that's also part of the tone that is sent not just by the number, but by how they steer the conversation in the media after it. I think that how the central banks steer the conversation before the number and after the number is, in many ways, in the long term, much more consequential. I kind of disagree with you on one point that you said earlier. I believe that there are some relatively significant short-term effects from the number. And yes, I take your point that in reality, for the full impact, it takes a long time for the full impact to ripple through.
Right.
Okay, I appreciate that. But there are some real significant short-term impacts that happen almost instantaneously. But I think that the major impact is from the pre-tone and the post-tone, and the actual number itself is just a drumbeat that keeps the things in rhythm.
Right. Yeah, no, I think that's fair enough. There's a psychological impact from that, right?
Yeah.
I mean, it's kind of like early on in the pandemic when, a lot of central banks, including Bank of Canada, said, listen, we're keeping rates low for a long time to emphasize that, get out there, invest, keep the economy running, like don't worry about this. That had a significant impact on the way people invested and planned, and then they had to turn that all around. So it's, I think I see your point. This is kind of tone matters for sure. Um, all right, Rick, maybe we'll leave it there.
Otherwise, I was going to fall asleep if we have to talk about rates anymore.
Yeah, like you said, in about how much? A little over a month, this news will be eclipsed. Yeah. All right. Well, we'll leave it there. Thanks, Rick, for the stories. And please like, subscribe, comment on what you heard. We're interested in your views. But until next time, it's been Carl and Rick talking risk. Cheers.
Have fun, everyone.